Thank you for joining us. I'm Butch Bacani. I'm the head of insurance at the UN Environment Program. And I'm here today to moderate a session on the role of insurance in supporting a nature-positive economy. Before I call on the panelists, I wanted to give you a bit of a presentation on the long-standing work of UNEP with the insurance industry and key stakeholders on nature. I'll introduce the panelists later, but I just wanted to give you a bit of an introductory presentation on the whole topic because this has been a very long journey for UNEP Finance Initiative, the insurance industry, and the nature agenda. So first of all, a reminder. For us at UNEP, the full role of the global insurance industry in sustainability has to harness the triple role of a risk manager, an insurer, and as an investor. If you believe in Maslow's hierarchy of needs, that's self-actualization in the insurance industry in terms of the full role in sustainability. That means not understanding, preventing, and reducing risk. That means absorbing financial shocks. We have also expanded the role of insurance to be just like lending and investment, where insurance can enable economic activities, and they could be sustainable or hopefully not unsustainable, and the role of institutional investors as well. So we have this master narrative of cognitive consonance that the entire balance sheet of an insurance company has to be used and harnessed for sustainable development. And this brought us to develop the principles for sustainable insurance. The whole point of the PSI, when it was born in 2012, was to embed sustainability in the core business activities of an insurance company and across its spheres of influence. This is why when we start discussing nature today, we're going to go right to the heart of the insurance business, particularly on risk management, underwriting, claims, in addition to what has already been discussed in many forums, the role of insurers as investors. But in addition to that, there's a whole value chain and a whole sphere of influence that has to be catalyzed. Over the years, we have produced guidance at UNEP on what does ESG mean in insurance business, because this agenda largely emanated from a responsible investment agenda. So we have created the first global ESG guide for non-life insurance business, which already embeds nature. We have already also produced a global ESG guide on life and health business, which also embeds nature across sustainability issues. But these are very different lines of business. Non-life is very different from life and health. In life and health, you're talking about mortality, morbidity, hospitalization, and longevity. That's very different from insuring a house or a vessel. But science is showing us increasingly that climate and nature are two sides of the same coin. So if you look at the stripes, the more that we degrade nature, the more that we also increase the impacts of climate change. And climate change is one of the direct factors of nature loss. So we've talked about, I'm sure in many of the sessions in the Global Roundtable, the Kunming-Montreal Global Biodiversity Framework. But there are other policy frameworks that are equally important. The high seas at the moment is a wild west when it comes to marine ecosystems. The Global Framework on Chemicals was approved last year. And even though it was a treaty wasn't forged this year, we're hoping that the Plastic Pollution Treaty will be forged as well. So how does nature connect to insurance? If you simply look at the facts out there and translate pollination, crop production, greenhouse gas emissions, infections, you can simply translate that into insurance lines. What does that mean for property insurance? What does that mean for life and health insurance, etc.? And then you'll hopefully see that nature loss and insurance is really quite connected. So if we have the net zero agenda on the emission side, we also have the nature positive agenda on nature. And this is what I was saying also, this is not an overnight journey for UNEP and the insurance industry. We've been looking at nature for a long time. The plastic pollution study that you see there was done in 2019, 5 years ago, on what does plastic pollution risk mean to the global insurance industry in terms of physical transition and liability risks. We've worked with WWF on a number of studies, including World Heritage Sites. So there's a lot of things that we have done over the years, but a lot of that culminated a couple of years ago when we partnered with the Convention on Biological Diversity to really take stock of all of that emerging practice and understand what is really, how can we accelerate and scale up the role of insurance in addressing nature loss. That got synthesized last year with a briefing paper on basically the concept of insurance for nature positive and what are the levers in insurance that could be used. And finally, this year, in May, we created a PSI working group for nature. And they are many of them are part of the panel today. And very quickly, we were able to prioritize what are the things that we need to start doing so that we can really embed nature into the heart of the insurance business. So these are some of the priorities, and our main priority this year was to set up a report with the priority actions on nature for insurance. What are the things that insurers need to start setting so that they are teed up nicely to really embed nature in core business and at the same time support the targets and mission of the Global Biodiversity Framework? And there's other priorities there that we'll be tackling in the coming year, and you'll see a lot more outputs very quickly soon. So from the working group, we now have the first output, the first global guide for insurers on how to set priority actions for nature. I'm not going to go through all of it in detail, sorry. If you scan me, you can scan that, not me, all right? And that will give you the full report that we posted online today. Last week, we launched the summary version, but you now have 100 pages of Christmas reading to make sure that you get your homework for the new year and get nature really front and center of your New Year's resolution. Good. So what's in that global guide? We are showing you here what are the intersections between nature and different lines of business. This is not simply a non-life agenda. This is also a life and health insurance agenda. So there has to be sophistication across that. What's our theory of change? What does an insurance company, wherever you are in the world, what are the basic things, the bare minimum that you can do to get going? And then how you can go deeper into, depending on your business model, across lines of business. So that's what's in the guide. I'm not going to bore you with the details, but you can see here, it's a very comprehensive guide. It goes into a lot of detail into what are the intersections between different lines of non-life business. It goes into life and health insurance business I mentioned earlier, down through our theory of change. What does this mean across the insurance value chain? The minimum things that you can do to get going, and so on and so forth. So I just wanted to share that with you. And as our master narrative, nature is now a priority for our work at UNEP and insurance, along with the work on net zero, along with the work on climate resilience, along with better risk assessment of sustainability issues, and sister initiatives like the Net Zero Asset Owner Alliance. That's what we're trying to aspire for in terms of what is a sustainable insurance industry and what is a sustainable insurance company. That has to be done, and nature is a big part of it. So with that introduction, let's call our speakers on stage. Good. So we have two insurers, one environmental organization, civil society organization, and one, how do we describe TNFD? A disclosure framework? Disclosure framework. Okay, great. I'm going to start with the insurers and start with Aviva, Thomas Viegas, who's the nature strategy lead at Aviva. But he's been doing the merry-go-round because he used to be TNFD, and he used to be also with the Bank of England. So a very interesting profile. Now you're in an insurance company. Tell us the thinking at Aviva on nature.
Is this on? Okay, perfect. Thanks very much, Butch, for the introduction, and thanks so much for that presentation. First by saying it's been a pleasure to be part of the working group. I know led by Verena, who I think is able to be here, and it's so great to see so many working group members with us. So a little bit about kind of why it's important, and then on what Aviva has been doing, predating my time, I should say, as well, and what we are doing. So I think as you kind of articulated, Butch, I mean, really, when it comes to nature, when it comes to nature loss, which I think many of us are well versed on the issue here, I mean, for insurance companies, I mean, it is a fundamental re-questioning of business model and activities. I think you kind of touched on it a little bit, but from what we're starting to see, you know, globally through kind of ecological breakdown of climate and nature crises which they've brought, you know, that is leading to rising frequency of claims, premium rises, reinsurance pressures, you know, you name it, these are real challenges that we as an industry are facing. For us at Aviva, we've recognized for some time that nature kind of is important in and of its own right. Beyond climate, we were one of the first insurance firms in the world globally to have a bespoke biodiversity policy in 2021, and that covered our investments, our underwriting, and our operations. And we've been progressing against those actions since we set out that policy. Part of my role, but part of the work Aviva is now doing, is very much kind of elevating the role of nature kind of on a strategic par with climate. We're very much increasingly seeing it. And I think the work being done by, you know, this working group, work that's been done by the TNFD has only illustrated the fact that, you know, thinking about climate alone is not enough anymore, and thinking about it in tandem with nature has to be the new way going forward. Otherwise, for firms to really transition in a way that's fully sustainable.
Thank you, Thomas. Can you tell us how that culture on nature evolved in Aviva? Because for some, this is not the first time we've raised it with insurers. We've been in London before, 10 years ago, and it was deemed to be off-the-wall topic, right? But what made Aviva, what was the stimulus or stimuli in Aviva that really made you guys say, like, well, we need to actually address this issue? Was it science? Was it policy frameworks evolving, or simply sustainability leadership from some of your individuals in the team?
Sure, good question. I'm not going to sit on the fence and say a bit of everything. I'll try and go with two. I think one definitely is the kind of senior leadership. So, you know, our current CEO and previous leadership has been very committed to sustainability. You know, kind of I've mentioned our biodiversity policy, our net zero ambition goes back several years as well. So, you know, we very much had it support from the top to really progress this work kind of internally. But in addition to that, and I think which is really important, which I think we might touch on, is we've also been heavily driven by our customers and clients. You know, we're predominantly based for our underwriting in the UK, Canada, and Ireland. And, you know, we regularly survey our customers and potential customers and work on nature, work on climate change, work on sustainability issues, scores very highly of what our customers want us to be working on, what's important for them. And so in that way, we have that mandate from our customer base to actually be working on it. So again, it's a bit of both, but I think kind of what we would hope to say is kind of the way we've approached the agenda, both climate and nature, is kind of organically stemmed from those two areas of support.
Good, thank you. We'll go deeper later on, so, but that's the easy part. So for you, we have our former colleague who's actually now with ICEA Lion, an insurer in Africa, especially domiciled in Kenya. We have Sonje Wakesho, right, who's the ESG specialist at ICEA Lion. Tell us, Sonje, what's happening at ICEA Lion and what made you one of the co-leads for this particular project of the PSI Working Group for Nature.
Okay. Yeah, thank you. Yeah, so the name is actually Sonje, although yeah, many people call me Sonje, Sonia, yeah, but it's fine. Yeah, so yes, so ICEA Lion, I may say it's, we look at it from the entire value chain of insurance. working with all our stakeholders and just appreciating and bringing everyone on board with regards to nature. So everyone is interested in that journey. And I like to sing a lot, so I may keep referring to some songs here and there. So actually, one of our theme songs for ICEA Lion, with regards to nature and everything on matters to do with sustainability is "Love is the Message." I don't know if you know it. It's quite an old song. Love is the message, and the message is love from the streets to the mountains to the heavens above. So you see, it encompasses everything and everyone. So when we talk of stakeholders, we are not just talking about the humanly, stakeholders alone. We also look at whether it's nature or climate or anything that falls under the ESG aspect to be our stakeholders. And so we have to create a balance. And that's why we came about with the theme of love is the message. Because like yesterday also, there were some discussions of the way poverty, especially in Africa, where we depend a lot on nature. And there's a lot of, unfortunately, poverty. And when it comes to poverty, it's all about, survival. So then how do you start telling someone to take care of, nature, and they're looking about surviving, getting the next meal for themselves and their families? So, you have to create and get this balance between them, bring them on board, to appreciate this nature, to appreciate that they need to use it, in a sustainable manner. And, so then thinking of, creating that balance between whether it's the communities around us, whether it is the supply chains that we are working with. So thinking to bring about solutions which will not necessarily solve one problem while creating, a problem for another. So getting that balance, of course, which is also in line with the GBF, where it says that, by 2050, we should be living in harmony with nature. So as we are looking at living in harmony with nature, with the society, and everyone else. So that's really was and is our driving force for anything to do with sustainability and also nature in ICEA Lion. Yeah.
Thank you, Sonje, for those initial thoughts. Maybe similar to Thomas. So we know your CEO, Philip Lapocoyet. He's part of the PSI board. He's the chair of the Nairobi Declaration of Sustainable Insurance. But tell me the engagement with the underwriters, for example. How are they reacting to the nature agenda? Because for me, in the insurance business, ultimately it boils down to evaluating, assessing, and pricing risk, and that goes to underwriting. How are they reacting to this issue? Yes, we have sustainability specialists like you. You have a mandate from your CEO, but what do the people in the business units, how are they reacting to this?
Actually, they are very excited, and funny enough, we had quite a number of them participate in the working groups, both the priority one as well as the TNFD one. And they're very excited about this new agenda because, they're appreciating the risks and how it's, it will directly impact insurance. And also, of course, with our customers as well. And, the entire value chain. So they're really excited to bring it on board. And we're looking at it like this is an opportune time because this is the time now we want to fully, integrate ESG and all matters of, nature in underwriting because we had not really fully integrated that so that it informs, our pricing and also to, to see if we are going to bring, all our other stakeholders on board and the ones who will be heavily involved, like in risk management with regards to nature, then if we can give them a better, pricing and also they're really excited and looking forward, to this. Yeah.
Great. It's good to hear that reaction that underwriters actually are understanding why nature is relevant to the core insurance business. Let's move on to our to WWF. Amandine, and we've been engaging with WWF constructively over the years on this agenda. And so Amandine knows that there has been a journey on this. Has been quite a journey, but it's great that we are going to the core of the business, right, as far as this agenda is concerned. Tell us your thoughts at WWF Switzerland. And we know that WWF is a big federation, but if you're looking at insurance center of expertise or excellence within WWF Switzerland, thankfully is carrying that flag.
Well, okay, for sure. Thank you, Butch. So yeah, so maybe I can start to explain maybe why we, as the WWF Switzerland, really since now, I think 2019 or 18, I think the first time we really worked together, are working on insurance. We really first think that insurance are really, really crucial for nature. And going back on the number that you've heard, all of you, during the building bridge, but the biodiversity loss number, we currently have 73% of loss of, in average, of monitored species, 73%. I mean, I have to say it because we hear it so much, but when you read again, it's 3/4 of the monitored species we know are gone. I mean, so I am always like saying it, and 2 years ago, it was 69%, and it's accelerating. So that's really, honestly, very, very concerning and sad. On the other side, I really truly believe that insurance, not alone, I know, they're not the only one, but they do have really an important role to play to help us to decrease this trend and to slow down and even reverse the loss of biodiversity. Why? Is because, I mean, first, they understand risk, I will say, and risk coming from nature like no other economical, entity. So that, and it's risk. We could see, with a flood in Spain, recent flood in Spain, which will cost approximately, they say, 0.2% of the GDP. I mean, that's a lot, and that's risk. And I think insurance really understand that. On the other side, they have a tremendous impact on nature. I mean, a lot of projects don't get finance if they not get insured. There's a famous quote from Thomas Burbel, the CEO of ICEA, who say, without insurance, there is no financing. And this is really, really important to understand. And usually for big, large projects, the insurance are not alone. There's several insurance. There is broker, so the role of broker is also very important. But the role of insurance with, like, let's say, what they decide or what they insure or what they're not insuring, goes on both sides, is extremely important, and also on how things are getting insured. So the claim management is extremely important for circular economy, but also how products are being designed. You have a lot of incentive as insurance with the way you design your product. If you think, just a concrete example on environmental liability insurance, if you don't set up the product correctly, it can have a lot of perverse effect because, you have an incentive to pollute. In a way, it's a moral hazard. So you need to be careful on how, you set up the product, but it is very important to have those products in order to clean up after a spill. So all this element on what is insured, but also how things are insured, how products are being designed, I think, insurance have a very powerful role to play.
Thank you, Amandine. And it's good to hear, if I may, more sophistication from civil society on this agenda, because in yesteryears, it was far less sophisticated, I think, when the engagement with civil society. But I think you're articulating pretty much different levers in the insurance value chain. So what has been the wake-up call for civil society to all of a sudden say that, well, insurers are part of the sustainable finance agenda? Has this simply been because of relevant initiatives that you realize that insurers could actually do something about this beyond their roles? Because there has been a traditional focus on the investment side, and that's still absolutely important, and we're not saying it's not important. It's part of the solution set, as I mentioned earlier. But on the underwriting side of the house, has there been a eureka moment there?
That's a very good question. I can just speak personally, maybe. I think for me, that's very personal. I always wanted to put the focus on our work on where there is a direct impact between a financial institution and a project or a company. And direct impact, you have it through direct financing, so credits, and you have it with underwriting. So that was always a bit where I thought I want to put the focus, versus that, asset management, not saying that there's no impact, but can be an indirect impact because it's a secondary market. So that's it's a very, a theory of change that you can, agree or disagree. And I had also personally a bit of an awakening call when we worked, and I think it was in 2016. I think it was 16. Yeah. My son was born, so I remember that it was 2016. We worked on the Virunga National Park campaign against two companies that were Total and Soko doing exploration in Le Virunga, which was one of the oldest African, park, very famous. And then we start to explore, look which, how we could put pressure on those two companies. And we start to look at all the financiers of Soko and Total back then. And also we start to look at the insurance. And that, for me, was really like, we start to have interaction with some insurance, trying to discuss with them not to insure, actually, the exploitation, in those natural parks. And that was, for me, a bit of a waking call, yeah.
Thank you. And we can touch on that more later as we go deeper into the discussion. Emily, the TNFD obviously also built on the success of the TCFD, if I may. But obviously your own shop and its your own initiative. How does insurance play in that agenda?
Thank you very much. And you asked me how to describe TNFD, and you called it a disclosure framework. I think to begin, I would emphasize what our co-chairs and our task force members emphasized from the very beginning, that we are a disclosure framework inspired by the success of TCFD, but we're also a risk management framework, and importantly, a risk and opportunity management framework, which I think starts to layer in a lot from the insurance angle for what we've produced, how it's different from TCFD and how it can be used and useful for insurers. But first, just for those who are new to TNFD, we, at the center of our work sits a task force led by the market, just like TCFD's was, and there are some insurance companies have been in the task force for the last 3 years, helping to build the framework. We have two or three task force members, and then we have a forum of interested organizations, and we had a set of pilot testing. So we used the perspective insurance in building the framework and to pilot test it to make sure it was used and useful. And we've seen it both from the angle of investors, but also through the role of risk management. And one thing we have found is, and Thomas was saying this to me before we start, that something we developed in addition to a set of disclosure recommendations, so there's the 11 recommended disclosures of TCFD, which we carried across to express in a way that's relevant for nature more broadly, and then added a few more disclosures. In addition to the disclosure recommendations, we developed the LEAP approach, which is an internal assessment process for identifying and assessing how organizations depend and impact on nature and the risks and opportunities it creates. And that has had a lot of interest and uptake from the insurance industry, which I think is going to be, it's encouraging, but also going to be really important for us going forward to keep learning from them. And one thing we found in the application of the LEAP approach is it's relatively easy to start getting at exposure. We have tools like Encore, where you can look at where are you exposed to high impact and dependency sectors, very useful. But then when you're trying to get more specific, what is important, and I think, well, you guys told me relatively newer to insurance and many others, is to get location specific. And then to move from an exposure assessment through to a detailed risk assessment, going from heat mapping through to asset tagging through to scenario analysis. And that does get increasingly complex. We've done guidance on risk assessment methods and on scenario analysis, but we're aware that from the feedback from the pilot testing and now from the group of over 500 early adopters of the TNFD's framework, that's proving more difficult to quantify, to assess risk, and to do that in a forward-looking way based on location-specific information. So we're both encouraged but also continually humble that we need to learn from best practice and what's proving possible, and also playing a role to create the system that enables change. So working with those developing the analytic tools, that trying to unlock more access to the data that's required, and so on.
Thank you. Emily, in a lot of these risk management and opportunity and disclosure frameworks like TNFD, people tend to highlight sustainable finance as a key part, but when people talk about sustainable finance, they don't really talk about sustainable insurance, right? It's largely an investment and lending narrative. Let's be honest to ourselves, and this is why we're constantly championing the sustainable insurance agenda, because the different parts of finance are really heterogeneous. Banking is a very different business from insurance, same with asset management. How are you calibrating or recalibrating frameworks like TNFD so that they can be more adaptive to different parts of the financial sector?
Well, I think we're going to be leaning on the likes of yourselves, actually. I mean, we've so far made the decision in the task force. Our guidance for financial institutions is not split into the different types of financial institution. It covers asset owners, asset managers, insurance companies, banks, development finance institutions, and so on. So we have taken that approach to be looking at those coherent. We break out specific points where we think it is of most relevance, but we haven't done that in a very granular level. And we've discussed that. I mean, we've even discussed the idea of LEAP for underwriters at one point was a suggestion. But we're also aware of the amount of guidance that's being produced. We have sector-specific guidance by real economy sector. So I would welcome feedback on one, if more granular guidance, or even pointing on this opportunities angle around insurance is needed, but also what the role is for TNFD. What we've tried to do is create a coherent, credible language, really, a set of definitions and concepts, building out the disclosures, enabling that transparency and accountability. We hope that through that, lots of flowers are already, blossoming. And of course, it's building on your work that came before. But at the moment, we do not have in our work plan. I don't know if that will please or disappoint, to look at very, very specific tailored guidance around insurance in the sustainable finance lens. But would welcome thoughts on whether that's needed and who's best to play that role.
I'll update my Christmas list for Santa. Well, with that, I think there could be an opportunity there to go to that route. And in fairness, it's not only you. We're also talking to the Science-Based Targets Initiative, for example. There's going to be guidance on net zero standards for capital markets, banking, investment, and insurance next year. If you look at investment, there's guidance for asset owners, there's guidance for asset managers, there's also a value chain for insurance, there's also reinsurers, and there's brokers. We need that sophistication, I think, in order to really get the different actors in the value chain more deeply involved in this agenda. So yeah, we have 25 minutes. This is not going to be the session where we're last 10 seconds for one question. So we're going to open the floor right now for any questions from the room before I make life difficult for the panel. Yes. Please state your name and organization.
Hi, thank you for the conversation. Dawn Slevin with ELS Europe. I spent many, many years working in insurance and actually had the privilege of working on the taxonomy tag and drafted up the inclusion of non-life insurance into the adaptation Annex 2 of the EU taxonomy. So I suppose I've quite a large footprint on this, and one of the biggest challenges is, of course, valuing nature. So, I mean, if you take any of these, large events that have happened, say, for example, fires, where private property is impacted, the focus is on the value of the private properties, and of course the life. I mean, these are huge, huge tragedies, very significant, but there's very, very little light shown on the damage to nature, which can be absolutely enormous. I mean, with the Australian fires, 1 billion vertebrates were destroyed, at least, and that put that forest on tipping point. So I suppose the question is, insurers, have you been able in TNFD to help to crack that nut? And how is that taken up, again, by the underwriters? I think you asked a really good question there about underwriters and how they approach that and bring that into their product. Thanks. Sorry about the long question.
Great. Anyone from the insurance team of Aviva and ICEA line wants to take that up?
Happy to answer that. I think it was a really good question. I think to kind of take it to kind of another level that you said about essentially looking at the state of nature beyond the kind of state of the financial and economic impact. And I think it's something we're particularly very keen to be looking at further, both not just on our investment side, but the underwriting side. I know the TNFD has placeholder for state of nature metrics, and there's obviously been the great work that's been ongoing by the Nature Positive Initiative to try and distill this. And I think it's obviously incredibly important because I think, when you're kind of starting to embed this into practices, engaging with underwriters, being able to engage in a kind of small set of manageable state of nature metrics to actually assess some of the impacts on the state of nature in addition to any kind of financial impacts is going to be critical, but making sure that they're credible, usable at scale, I think will be kind of really vital. So, I mean, in short, we're very keen, very engaged on this work, but I still think there's work to do to make sure that those state of nature metrics are there usable, particularly, I think, when you go beyond the real economy to the financial sector. But there's positive developments, I think, in that space.
Thank you. Did you want to add, Sonje, or no?
I can add,
Okay.
Well, the question was on valuing nature, right? And I think, well, it's a tough one, to be honest. I think to embed really nature into financial decision making, into pricing of insurance product, that will be necessary. However, the risks are big. I really see huge risk in putting a price tag on nature, and that's very personal now because I'm not representing the whole WWF opinion on that. But there is, I have just really a fear that nature will always be the loser. It will be always an underestimation. Maybe it's better than no estimation, but I just want to say this is a lot of risk in doing that, and sometimes I'm just wondering, before going on those sophisticated models, which is quite, we could start, there will be, to start by looking, really by focusing on sectors which are the most impactful from a climate and biodiversity point of view. And we know which one they are. We know. It's infrastructure, agriculture, pulp and paper, fishing, and you have the sector which are the most impactful on nature and climate. And start there, start looking what you can do there, start looking at what kind of product you have in that field, what kind of incentive you can have as an insurer, maybe before, for me, but going into very sophisticated model, that might lead to actually perverse effect. But,
yeah, I always find the question about value, there's too much to talk about I can keep seeing the clock ticking, 20 minutes. But I think when we ask about value, we risk speaking at cross purposes based on different perspectives of what we're talking about. For me, for in TNFD, we look at value as the relative importance of something. And again, coming back to the place specificity of nature risk, knowing that a shortage of water is not going to be the same in terms of its value and therefore the same in terms of its risk, depending on whether it's a water-stressed area or not. That in itself is an understanding of value, and it's very important for risk and very important for insurers. So we have the implicit understanding of relative importance, relative value woven into the way we've designed the framework because it matters for effective risk management. But we have also gone further. The guidance in the LEAP approach is built on than many things that existed before us, including the Natural Capital Protocol, which includes steps for actually looking at valuation in terms of what are the costs and benefits to business, and indeed the costs and benefits to society, which can loop back to business by creating reputational risk and so on. And so that is within the assessment approach. I think we know we know from the experiments of protocol it's quite demanding and difficult to do that well. But I know that the Capitals Coalition is looking at ways to be able to credibly make this easier through the work of the Values Commission. So I think it's one of those other important areas, but we're already taking critical steps to make it part of the DNA of people's thinking, the importance of thinking about value in a nuanced way, but actually folding it in. It comes back to the risk assessment. Doing this in a lot of detail to get to the final numbers is of course, demanding in terms of the analysis and the data needs.
I'll also add my 2 cents. So maybe 10 years ago, we were at the Palais de Nation right across here with a room full of insurers and catastrophe risk model vendors. And I simply asked them, those risk models, because physical risk is one of the fortes of the insurance industry, hazard, exposure, and vulnerability. And my simple question was, how much of those models impute nature? And the deafening answer was none. So I hope things have changed since then, Thomas, that Aviva's models impute nature into your risk models. But we need to get into that direction, really to get it into the very core management of risk. Otherwise, it's going to be quite fluffy in terms of embedding nature.
Yes, so I was in a different forum, and there were interesting discussions from the accounting side of that, because someone had mentioned that how do we value nature, the same way we value like infrastructure and all. And suggestions had been given, like if we view it like, as art, the way it's there and it has these huge values. So there's an accountant who stood up and said that would not resonate with them, but how about we work with the accounting, regulators and all, and to actually state that if you undertake some kind of risk management with nature for whichever companies, whether it is the financial sector or the real economy, and if you're, having initiatives which are nature positive, then that will automatically go as, as a profit in your books. But if it's anything which is, impacting the nature negatively, then it goes as a loss. And so they say, find a way of including that in the regulation. And they said, that's where now you'll get, people talking, because the accountants also will understand that. And, they're the ones who are dealing with the money. So then you're like, okay, that's probably an interesting discussion.
We're allowed to build from each other. Can I just put one thing, just very quick, briefly, that I think as this area is maturing rapidly, there is, building from your point, increasing interest in both valuation methods and natural capital accounting, particularly corporate natural capital accounting. So we ran a session of that on those two topics at Cali at COP16 in Colombia, and it was standing room only. It was absolutely packed, and we had 4 companies and financial institutions giving examples of how they're doing that accounting. So I think as this matures, organizations are starting to do this in a systematic way through their balance sheets or environmental profit and loss, and finding it to be a very valuable way of systematically looking at the information.
Good. Any other easy question? Yes. And then we're going to go another pass, maybe, hopefully, with a run with the panel.
Hi, thank you for an amazing panel. My question is for the insurance companies, but also for other people on the panel. So you guys, you guys just mentioned about insurance companies not computing for nature in their risk metrics. One, do they know how to do it, considering TNFD framework is very recent? Would they be incorporating any of that? Second, for them to be competitive with their other insurance companies, if their competitors aren't doing it, and you are charging a higher premium for incorporating some of that risk, considering for you to be competitive in the market, how do you explore that that kind of juggle between including risk for nature?
Shall I go? Really good question on 2 counts. I'll try and cover both parts of it. I think on the first bit, the short answer would be, I don't think I don't think any insurance company could say that their modelling right now encapsulates nature in a way that would be robust enough. I think it's a journey. Stuff like the TNFD's LEAP approach and some other work is really helping, but at its core, we are facing actuarial models that have been around for like decades, and actuaries that, to be fair to a lot of us, are building their capability and capacity on nature. And so that's a big part, and something that the working group touched on as a cross-cutting priority across the sector. Being able to engage with actuaries, underwriters really on this agenda is a really kind of priority action, as outlined. On the second part, on the risk carrying into premium, I think it's a really good question, and I think it's one that, not just internally, but everywhere, the kind of one question you get is who's going to pay? Who's going to pay when you start to price in this risk, and who does it translate to? I think that's obviously going to be very contextual dependent, as Emily said, given kind of the aspect of nature risk or opportunity where it lies, etc. One story, I was speaking to a friend who's based in an emerging market, and he told me that he'd kind of recently got his update on his policy, not Aviva, and that they just said, it's gone up by 40%, and the only reason they gave, the only engagement that the firm gave, just put 2 words, climate change. And for me, I think it goes back to a big part of, and again, something that the TNFD has looked at acutely, is how do you actually have that stakeholder engagement when it comes to nature, because given it's much more local, context specific, and when you're starting to talk about, as you've said, when it's talking to pushing on costs or rising in prices, you're only going to have that buy-in or that credibility with your customer or client if you have that robust engagement. And that goes beyond, I think, the capacity building with them. It's also this re-education piece. But again, I think it's going to be dependent. And I think when you start to look at kind of potentially uninsurable places, the costs may be kind of being borne out of the private sector, and you're starting to look at kind of a multi-financing model with public sector and state actors as well. But I think really good questions.
Thank you. And unashamed self-promotion. There's work underway in the PSI Working Group for Nature on mainstreaming nature-related assessment of nature-related risks, impacts, and opportunities and dependencies coming up. So stay tuned for that. One of the co-leads is here, Esther Agater from ASR. So we're not done with, it's just a priority list right now. It's a wish list right now. But I think we're going to go deeper into 2025 in terms of how do we really mainstream a lot of these practices, including the LEAP approach under the TNFD. Okay, 11 minutes. All right. Okay, we can go a little bit deeper. How about, can we go into the different, at least different lines of insurance? Not all, but most people understand low-hanging fruit to be commercial lines and insurance, so corporates, whatever industry it is, agriculture, food, mining, etc. What about personal lines, business? Is there an opportunity there that we're missing?
Do you want to try? I'm not insurance, but like.
So now you're an insurer now.
Yeah, I'm an insurance. So.
No. Okay, go.
That was for insurance. Okay, sorry.
Go for it.
No, but then I try to be quick. I think personal insurance was very interesting compared to maybe commercial insurance. And please, Thomas, you can contradict me. Is that what is difficult is that the decision of the insurance come rather at the end. So when you buy a car, you buy it first, and then you will go to the insurance, after. So there is like a bit compared to, I feel what I said at the beginning, like commercial insurance, where I do think that insurance sometimes come first before you go to your bank. For personal insurance, also flat, or it's a bit the opposite. However, I think the claim management, that's where maybe there is something to do, like repair instead of replace. So you crash your car, let's, repair it. And less, instead of, you can have insurance scheme to, to incentivize you to repair instead of replace, or to build back better. And that's personally where I see the levers, because actually, on the claim management, because actually the insurance decision come rather at the end of the decision chains. Yeah.
I think speaking like a true insurer, I think the only thing I'd add is an example, in particular on that claims management bit. So one of the things we've been doing at Aviva, predominantly on the climate side is on terms of that claims and kind of renewal is looking at supporting particularly those who are with auto insurance switching to kind of lower emission vehicles when they're kind of updating their policy and thereby, encouraging those more sustainable choices. So I think, there are the mechanisms there on the personal line, albeit they've been less explored to date, but there is that, particularly through that claims process, that mechanism to support those sustainable choices. And I think you could start to, which the working group did, started to think about ways of how could you encourage additional things covered by personal lines that kind of have lesser impact on nature or impact drivers to help support those more sustainable choices.
Okay.
Yeah.
Okay.
Also, I was just adding, for us, I was having an interesting discussion on the life and health side with regards to personal, lines, but on life and health. And so having that discussion, by the time you're engaging this client and just, having discussions on where do you live, because it makes a huge sense in Africa, where we come from. So where do you live? Is the place, like, let's say, polluted? Do you live next to, a manufacturing farm which, disposes their waste in a way that is polluting? And you're there. And we have a lot of that, especially like even in the slums and all. And it directly now gets to, affect your health. So, and of course that will determine, increase if it's morbidity and also mortality. So having those discussions and to see how can we improve that and include that, in the insurance space, especially as you say, for life and health. So that's both for mainly, as we say, for in the personal lines. Yeah.
Great. So that's a good example because there's a lot more evidence of forest bathing. Being exposed to nature is really good for physical and mental health. What about, if we go down that track, what about lifestyle and diets, right?
Yeah.
Is that being used as a lever by insurers to actually, there's now a planetary diet, right? And there's lifestyle changes that is more environment friendly. Is that being used?
Yeah, as I said, like now, yeah. Those are some of the things also we're including and having that discussion with the life side. With the life business side, yeah.
Okay, good. What about, in the 6 minutes that we have left, I want to touch on a few more things. We haven't touched about regulation. What's the role of insurance regulators and supervisors in this agenda?
I think one, besides mandates, of course, which for us would be good, especially in Africa, since besides, making it mandatory for all to adopt that, but then also it creates a level playing field, something which you had raised before. It creates a level playing field, especially for organizations like us who've gone ahead, of the curve. So there's that one, mandates, but I think two, also to help and foster collaboration. So like if it's the NDSI. And I would like to see a lot of, very powerful collaborations, like, the way we have the net zero alliances for all these, financial institutions. How about they help in pushing for nature positive, alliances, whether it's for banking, for insurance, and also, yeah, so I think both the mandates, but as well as, pushing for collaborations, yeah.
Good.
Okay. Well, quickly added, because WWF do work a lot on this topic. We publish every year an assessment of where the supervisors and central banking and insurance stand. There have been a lot of progress. I can just say that on insurance, there's still a lot of progress to be done for insurance supervisor to really integrate nature. It's less than 50% of the indicator of our SOSREG assessment are being met actually by insurance supervisors. So there's a room for progress. But the impact, like you said, it can be very big. They can require risk management practice, to embed nature. They can require specific risk frameworks. They can require disclosure from insurance. They can require every insurance to disclose according to the TNFD. So they have a big impact. They can even, require higher capital requirements and for, let's say, the most destructive activity. And that sounds a bit, let's say, crazy or a bit too ambitious, but EIOPA, I don't know if you follow, just, on climate, just like last month, have it's an advice, a recommendation, but it's still EIOPA, recommended to increase capital requirement for fossil fuel company for equity from 17% and bond 40% more, because it's more transition risk. So maybe I do believe this kind of thinking will come on nature as well, and that's incredibly powerful to move, to move off all the economy.
Before we end, we have 3 minutes left, so we have a bit of time. Thomas, maybe Emily, you can answer a question that always comes up. And this is a very real question and a very real issue. So most of the time we hear that there's already a lot of burden on climate. And so people are net zeroed out, people are CSRD'd out, etc. Whatever you want to call it. What is the strategy to get nature into that agenda in the same way that there's a very strong central focus on climate? Aviva has been a powerful example on transition plans, but what has been the strategy in Aviva to say that we can't say it's climate only? You're saying nature has to be there as well. But what is the strategy? Because it's a very tough environment for many to be grappling with many sustainability issues.
Yeah, it's a really good question. I don't know if I'll do it in justice in less than 2 minutes, but yeah, I think you're right, Butch. Inside these very warm walls, we know outside there's a lot of headwinds kind of coming on this agenda, and I think, which has been emphasized by a lot of these sessions, the transition is happening no matter what may come, and there'll be headwinds and tailwinds. But I think, to your point, and kind of what to do given that there's been this so-called climate fatigue, I think probably two things. One is being a bit smart, and by that I mean in terms of the creation of these kind of non-climate related methodologies, frameworks that they're building, that they're being consistent with what's come, and the TNFD has done that, and I think that's part of the reason why it's had so much uptake and success already, because it's showing that it's building on what's come or come before it. The second is strategic, and you mentioned transition planning. I think ultimately to bring nature to the kind of front of a firm, we have to get beyond this mindset of disclosure only, and it has to become strategic focus. It has to be strategy first. And I think when you start to do, everything will start to fall behind it. But I think you need to get to that place. And I think still there's some work to do. But I think the work being done, hugely in the past couple of months and years on transition planning is kind of where, a lot of the stuff kind of is telling us what's the issue, but how and what are you going to do to rectify and move is transition planning. And I think that's where we're starting to get to now.
Emily, any thoughts on that? Because the agenda of transition plans is now evolving and emerging, not only in the EU, we are, the UK, Australia, Canada, New Zealand, Singapore, they're all looking at this as well.
Yeah, and just to address your first question, we emphasize that, we continually emphasize that this is a risk management blind spot. You can't achieve our climate objectives without nature, but more importantly, we're outside of the safe space of 6, maybe 7 of the planetary boundaries. Climate change is only 1. So there's this huge risk management blind spot, and it is central to improve the strategy and business performance of every organization. So that's what we continually emphasize, and trying to avoid a compliance mindset while people are burdened by incoming compliance with regulation. Always retain that sense that this is in our interest to do. And yes, on transition planning, we've been working on transition planning guidance. We put it out for consultation. There's a lot of excitement and interest in it. We will be working through it in practice with some organizations over the coming year before we finalize it. And I think there's interest and excitement because it moves to embedding it into
action and outcomes of the organization in a structured, coherent way.
Great. Do you want to have an Insurance for Nature Positive Summit?
Which, I mean, you're looking at me physically, but I'm up for it, sure.
How about you guys? Can you raise your hand if you want to do that? All right. That's great. So a few final thoughts, I think. First of all, I think I wanted to recognize again the PSI Working Group for Nature for the really groundbreaking global guide. And the long version is up today, so you're the first to know. Also, my colleagues at UNEP, I can see Rami Gadicki, who's a co-lead of that project. We have our own Fab 5 at UNEP, so we have Rami. Is Jessica Smith here, who's the nature lead? We also have Verena Kraus, who's unfortunately not with us now, but she was project managing. She was doing all the heavy lifting for this project. We also have Emily Banzet, our communications lead for insurance. And last but not the least, we have Laura Lightbody, who did the legal review of the report. And last but not the least, to close, Sonje, do you want to sing a few lines of that song? Yes?
Oh, okay.
You don't have to.
Yeah. Yeah, so it goes, love is the message and the message is love. From the streets to the mountains to the heavens above. Tell everybody what you're dreaming of. Love is the message and the message is love. So let's love nature in each and every one of us and create that balance. Yeah, thank you.
I have a new song to teach my 2 young daughters, aside from We Are the World and Do They Know It's Christmas Time. Thank you so much. Yeah.